Tariff relief for markets, but for how long? Hi, everyone. I'm Maggie Lake, and today I'm talking markets with Noelle Acheson, author of the Crypto is Macro Now Substack. Hey, Noelle, it's so good to see you, as always.
Maggie, so good to see you. How are you today?
I'm doing good. We were just joking. Hi, Christopher. We were just joking that it feels like summer and everybody feels like they want a break, but there is so much going on. There is so much news happening this week. So I'm happy to get your thoughts on all of it. Hey to everybody who's joining live on Substack and on YouTube. As always, drop your questions, comments in, and we will get to as many as we can. And tell us what your good summer plans are while you're at it. We want to know. So let's start with news of the day: tariffs, a deal with the EU. Markets, I feel like, are some investors celebrating the fact that maybe we'll get some clarity. But on the other hand, higher tariffs than we've seen. And I see some pretty negative comments coming from some folks in Europe who don't think Europe got anything out of this deal. So curious to see how it's going down on that side of the Atlantic.
It is so fascinating, as you say, Maggie. And when I first saw the news yesterday, my initial reaction, like most people's, was, oh, markets are going to bounce tomorrow because this is the removal of a very deep layer of uncertainty. But did markets bounce? Pretty much everything opened up higher, but as we speak, things fell. I mean, the S&P is down. The DAX closed quite a bit lower even than its close on Friday, because the markets are finally realizing that, one, this actually isn't a deal yet, and two, and this is where I start to get really concerned, it could be the beginning of the breakup of the European Union. And I know we've been talking about that a lot, but I've never been more concerned about that as I am today.
Well, whoa, that's a big comment. Why do you think it's the beginning of the end?
Well, first
Or
of
it
all,
might be. It might be.
First of all, let's look at how this actually isn't really even a deal. First of all, there's a lot of confusion. Are pharmaceuticals included? Trump says no. Von der Leyen, the European Commission president, says yes, they are. And that would be good news if they are, because 15% is a lot less than the 200% Trump was threatening to impose on pharmaceuticals not that long ago. So the confusion there, and it's pretty important since pharmaceuticals are the largest component of EU exports to the US. So that matters. It's not really clear what's going on with cars. So again, what kind of tariff are they going to be having? 15%, it seems like, for now, but no one really expects that to hold. And wine and spirits, which maybe are more important to us over here in Europe than they are
No.
to you over in the US.
List.
But again, they weren't mentioned by anyone at all. And so no one really knows what's going on there. So there's a lot of details to be ironed out. But here's the thing: the EU has shown that it doesn't have a hand to play. And so it's in the details where things are going to get really sticky. And the EU doesn't have a hand to play because of what we saw last week with its summit, much vaunted, much anticipated summit with China, which some of us, myself included, hoped might actually produce some sort of trade, if not agreement, at least a commitment to think about collaborating more closely. All that the EU-China summit, the first since 23, all that it produced was a meaningless statement on climate that China is not necessarily even going to abide by, a meaningless. And I remember seeing that and thinking, oh shit, the EU is in trouble now. It doesn't have anything to gain by talking to China now. China snubbed it very publicly not only in the reduction of the meeting from 2 days to one, not only in the only signing a meaningless climate statement, and also many other of the visuals as well. China openly snubbed the EU, which meant that von der Leyen didn't really have any choice but to go cap in hand to the US and say yes to anything that the US wanted. Now, here's where it gets really hard. The EU is divided on this. We have many countries in the EU that are very anti-China: France, Netherlands, Lithuania, Poland. You have some that are very pro-China. Hungary and even Spain, where I live. Our prime minister was in China not that long ago. We've just given Huawei a whopping contract to get this store the wiretaps from the judicial services. What could possibly go wrong there? It's absolutely astonishing, the divide here. And is that divide going to go away? I really don't think so. Another thing that's very overlooked by the euphoria that we saw earlier today is that, one, it's not really a deal because the details need to be worked out, and that's going to take months. Then it has to be ratified by the various bodies of the European government. That's going to take quite a few months. Oh, this is after translating it into all of the European Union languages. That's going to take a few months. And then if the agreement fulfills certain requisites, such as, does this affect a nation's interests through either investment protection or labor laws or environmental standards, then each EU state has to ratify it. And what are the odds of that happening?
It's so interesting. Anytime anyone talks about that, I mean, I kind of feel like if the European sovereign bond crisis back when, the South was under so much pressure, there was so much talk that would have splintered the EU. And I think when they got through that, everybody thought, okay, well, if they held together through that. But we are in a really different geopolitical landscape now. And that was sort of more of an internal situation. This is a lot of pressure externally and a really changing landscape with shifting powers. So it's interesting that you think kind of coming to terms with this with so much money on the line might be different.
Exactly. And especially when you have some European nations that can benefit from their relationship with China while being deeply hurt by the agreement with the US. And many of them are probably going to start thinking, why are we even here? And Spain is an example. It is one of the strongest economies in the European Union at the moment in terms of growth. It is doing pretty well, largely because of tourism and largely eventually because it is part of the European Union. But still, no doubt some crazy people in the government, and there are plenty of them here in Spain, are going to start thinking, why do we even need this? That's even before we start looking at the surge of the resurgence of the far right in some countries, such as Germany, who have said that they think Germany should secede from the European Union. And right now, the AfD, the far right party, is the most popular party in Germany and would win elections tomorrow were they to be held. So this is shaky. You also mentioned the debt crisis. I vividly remember that. It was kind of brutal. But back then, Spain was, to take this as an example, it was kind of poor compared to other European countries. It gained a lot from its European membership. We had a ton of European funds pour in, so we weren't really going to lose that basket, as it were. But now there's just a lot of polarization. Politically, Spain is diverging from other European countries. We're not the only one. There does seem to be polarization, not just internally in European states, but even within European states. This was shown very clearly in last year's European Union elections, which had a very wide divide rather than the usual coherence that we get between the different on the political spectrum. So it's a different world, as you say now. Also, voters are younger. They don't really remember what it was like before the European Union. And you're going to have many political parties campaigning on leaving, and many will think independence sounds really nice roundabout now, despite the fact that it hasn't worked out too well for the UK.
Yeah. Well, I was just going to say cautionary tale to the UK, and we're getting a lot of questions on ETH, and I'm going to get to them, and we're going to bop back and forth. And as you know, everything we bring up, Noelle writes extensively about in her Substack, so you can all sort of follow the thoughts, and we'll bounce back and forth between the two. I just want to ask you on this point though, because you bring it up. I don't think a lot of people are talking about this. Certainly not over here, Noelle, which is very interesting. Is that risk at all priced into markets? Because we've seen really bullish narrative on Europe. They're finally spending, they're waking up. European equities are undervalued. This is where we're going to see a rotation out of the US into Europe. You just raised a huge risk, I would think.
Huge risk. And no, I don't think it's priced in at all. Let's say it's also not that likely yet. And when I say I'm more concerned now today than I have been, I think ever, I'll be honest, I still wouldn't put it at more than a 35-40%, which is, again, it could be, it's not a sure thing by any means. And hopefully common sense will prevail, because the European Union does have a lot to offer, but politics is going through a reset, as we've discussed before. And so perhaps this is just something that we need to get through. No, it is not priced in. But that said, there is still quite a lot of upside in European markets if if, and I would say only if, we finally get our act together and get a capital markets union or even kind of banking union, which will enable us to start harnessing not just the potential from the very sophisticated banking system that we have, but also start looking into things like stablecoins.
Yeah. Yeah. Okay. So that brings us, let's flip to the other side of the ledger. Even though, as you always point out, they are connected. So no one knows thyself saying Noelle is the perfect person to ask about this Ethereum run. Does Ether make a new all-time high before 2026? Does this run mark the kickoff to alt season?
Yes to the first, probably not yet to the second, and I'll elaborate a bit. I do see ETH heading towards an all-time high because it has that magical quality at the moment, and that is momentum. Now, whether the second part, as this altcoin season kicks off or not, that very much is determined by why ETH suddenly has this momentum, and I think there are a few things going on here. I'll start out by saying I don't think we're entering into altcoin season yet. That said, it's probably not that far away, and also, that said, I do think there is some of a catch-up in the narrative. You have large institutional investors who are comfortable with Bitcoin, and hey, what has underperformed that might now give me that little extra bit of alpha? So, ETH is the obvious candidate because it's liquid, it's got the derivatives, it has plenty of on-ramps, and it has no regulatory uncertainty whatsoever. So ETH is a candidate for any investor who's feeling a little bit more confident about crypto volatility and willing to go a bit further out the risk curve. So there's some underperformance catch-up going on, but there's a lot of other more fundamental narratives, less technical, more fundamental, and they include stablecoins. The passage of the Genius Act will benefit ETH a lot more than it will benefit Bitcoin. I think it will benefit the entire sector because what are stablecoins largely used for at the moment? They're largely used for trading. More people comfortable handling stablecoins might encourage more institutions to dip their sizable toes into the crypto market. So more liquidity, more trading, more market participants, etc., floating all boats. But most stablecoins do right now run on Ethereum still, and that is going to benefit ETH more than other tokens. Obviously, there are others such as Tron and Solana, but Ethereum still is the stablecoin network. That may not last, but that's where it is now. So you've got the Genius Act, you've got the catch-up, you've got the Genius Act, you also have the likely approval, possibly very soon, of the distribution of staking rewards to the spot ETFs. And this is going to be material because it could enhance the appeal of ETH spot ETFs to a much more mainstream audience. Any investor who's wanted that extra 3-4% yield, whatever the rate is at a given time, any investor who's wanted that extra yield can get it, just not through the ETFs. So this is going to broaden its appeal and possibly bring in more inflows. And I think a lot of the inflows that we've been seeing are kind of front-running that narrative, front-running that approval. The deadline for that approval is in October. I wouldn't be surprised to see it come quite a bit sooner.
So interesting. Do you think there has to be a positive macro backdrop for ETH to continue moving higher? I mean, for Bitcoin, it's a bit of a, store of value. And actually, when people are worried, there is interest in it as there is with gold. And some people want to be exposed to both now, not just gold. But there is that sort of idea that maybe this is a diversification in case things get hairy. Do you need is ETH different? And do you need a positive global growth story for that to move higher?
I would say, yes, it is different. And yes, you do need perhaps is a stretch, but it certainly would help in that when investors are feeling comfortable with risk, ETH is going to benefit. And what would it take for the big macro investors to feel comfortable with risk? A more favorable environment when it comes to monetary liquidity, also fiscal liquidity, market liquidity, the whole basket. So, ETH is different from Bitcoin, as all of your listeners know, but especially in that it is not as obviously a store of value and a risk asset. Many investors will see it's a risk asset. It's not really a store of value, but this misunderstands how Ethereum works at the moment. And that is when you pay your transaction fee on an Ethereum transaction, the ETH paid in the fee is burned. In other words, put more simply, when transaction volume goes up, the net new supply of ETH comes down because more transaction fees are being burned. So at times of high activity, ETH can act as a hard cap asset. It's not a hard cap asset. We're not going to fool ourselves, but it does have some supply very tenuous supply cap. And so it can, if you squint, it can pass as a sort of store of value. That said, I'm not sure that's the criteria that investors are going to be looking at ETH through, the lens that they're going to be looking at. You know what I'm trying to say there?
Yeah.
But it is not, so it is still very influenced by the macro environment. But that said, it does have some Ethereum specific narratives. Oh, one I didn't mention, another reason for the momentum is just the volume of ETH treasury announcements. I don't pay a lot of attention to treasury announcements because there's so many of them these days. And I think it's just a lot of noise. But I did a tally, I think it was last week. I thought, what is going on here? Just so many companies, just in the space of 10 days, announcing that they were going to be accumulating ETH as part of a treasury strategy. I thought that was particularly surprising.
Yeah, that's really interesting. So we've got another question, and this I think is kind of related to both areas. And it's from Boris. Noelle, great to see you. Great to have you in the chat, Boris. My question: a lot of the experts expect a deep consolidation with regard to risk on assets in August, September. Do you agree? And if so, why?
That's a very tricky question. A couple of months ago, I would have said yes, for sure. But I've been fairly pessimistic on the stock market outlook, to pick a risk market. And I've been fairly pessimistic on that outlook for a while, and I've been wrong. So I wouldn't put too much stock in what I say there. There are just huge risks at the moment. Perhaps one got taken out with the trade deal between the United States and the European Union. It's not a good deal. It's not even a deal, as I was talking about, but at least some degree of uncertainty has been removed. We're not entering into an all-out trade war, which would have been arguably worse than what we got. So there's that. But apart from that, the valuations are higher now than they were before Liberation Day. And is the outlook really better? Arguably not. True, the run is, or the market is largely driven by tech stocks who are not going to be particularly affected by the tariffs. So there a lot depends on their outlook, and that is in turn going to be affected by the interest rate outlook, et cetera, et cetera. Truthfully, I'll just be honest with you, I don't know anymore. I would have said yes. Now I am not so sure, partly because I've been wrong so far in my pessimism on the stock market, but also because there's a reset going on and we don't really know what that looks like. I do think we're not going to see rate cuts this year. I'm still standing by that. Right. But on Wednesday, we find out more about the FOMC's thinking as a group. It's likely we'll see the first dissents since Governor Bowman's dissent last September, I think it was. And if indeed, as is expected, both Governor Bowman and Governor Waller dissent, that'll be the first time two governors dissent since 1993. So there are signs of cracks in what has been a very cohesive FOMC commitment since the beginning of the century. And what does that mean for even further pressure on Chair Powell? He's shown that he can take it, and he hasn't got that much longer to withstand it. But again, who knows? He is, after all, only human, and it's getting vicious.
Yeah, it certainly is. And it's going to see. And of course, many of you watching the news saw that Trump visited the Fed to look at these so-called renovations, and it's extraordinary. Hasn't happened in many years. So Boris, by the way, and anyone who's wondering about that, and it's interesting, Noelle, that you're sort of not sure now, because I feel a lot of people are taking another look at their expectations, kind of going back and revisiting things because of some of the news developments that we've seen. And for anyone who's listening, I just had a great conversation with Eric who has the Substack, YWR, Your Weekend Reading. And he really fascinating, his take. And it's kind of related to that, Boris. I'm not going to front run it and talk about everything we talked about, but it's a little bit bigger. It's not tied to the news events of this week, but also sort of him looking at some things and changing his mind about some things and trying to look at the kind of contrarian pockets, if you will. And it was great. So I'm just gonna leave that breadcrumb trail for you all to say that you're going to have to check that out when it drops on Friday. But this is something I feel like everyone is kind of revisiting. So we do have the Fed this week. And it sounds like you don't think they're going to do anything. Is there, this is interesting with, and part of the reason I think it's so hard to figure out what's going on is because it's like handicapping the Trump administration, and that's proven incredibly hard to do. If we see a thawing in relations with the Fed and Trump starting to sort of back off, would that make you rethink your rate cut call for the year, Noelle, and think, oh, much like trade, maybe there's a window for some kind of deal and the Fed doesn't go now, but maybe they go and they give him the rate cut he wants later?
I don't think so. I mean, for one, there's no need to cut rates just yet. A lot of people will say, I'm borrowing, et cetera, but that's not necessarily going to impact borrowing costs. It's not necessarily going to impact mortgage rates, which are more determined by the 30-year or the long-term bonds, 10-year. And there's no guarantee that they are going to come down in line with Fed funds cut. We saw what happened last September. So the visit to the Fed was fascinating to watch, especially the body language, etc. And Trump looked like he was having a really good time with a hard hat on because he's a real estate guy. We can't forget that he even bragged about how good he is at renovations. And it's true, he's got a good reputation on that particular front of getting things done on time and within budget, within most of them anyway. So he looked like he was actually kind of happy. He even let Powell's public correction of some of the misstatements of fact. He didn't seem to be too bothered by that, which was unusual. And then he goes on to say, we see Chair Powell told me that the economy is doing really well, which means we're getting rate cuts. And this highlights why I just don't think we're going to get them this year, because Trump is confusing economic policy with monetary policy, showing he doesn't really understand monetary policy. Because when
the rate cut, right? He doesn't care.
Yeah, well, also, but in the real estate world, when the economy is doing well, your credit is better, and that means the interest rate quoted on your loans is lower. That's how real estate works. So obviously, monetary policy has to work the same. A strong economy means you lower interest rates. That's not how monetary policy works, as we all know. And so I think when Trump sees the comments on Wednesday from the press conference, as well as the statement, he's going to get upset again, and the vitriol is going to start again, and it's going to continue. And it's not just Trump anymore. We also do have many others in his administration piling in. Bill Pulte is just one of them, who's actually talking about filing criminal proceedings against Powell. All of this it's a lot of pressure. But
there are also many talking about a radical overhaul of the Fed itself, right? Like
yes.
that sort of, it broadened out from just beyond Powell to taking a complete look at how the Fed operates.
What is the Fed for? That I think they will eventually realize that that's not what markets want to hear. Markets want stability. What is interesting is that this year, the Federal Reserve is itself undergoing an overhaul of its policy, of the way it approaches monetary policy. And I think we get, by Jackson Hole, which I think is next month, we're going to get some inkling of where they're heading there. We could see something as radical as dropping the inflation target and focusing on something else. That's entirely possible. That's the kind of change they did the last time they reviewed their approach to monetary policy. So they're already going through a big reset. And that's yet another reason why I don't think we're going to see a rate cut this year. Why, when there's so much other monetary uncertainty going on? And Powell, all central bankers are by nature cautious. They sort of have to be. If you're not cautious, you shouldn't really sign up to be a central banker, right? You probably wouldn't get the job. And this is not necessarily always an advantage, as we saw with the transitory delay back in the times of the pandemic, but it is an advantage when what the market is craving is stability. And arguably right now, the market is craving stability. There are also a lot of very smart economists on the Fed, despite what many in the administration would have us believe. There are smart economists on the Fed, and they know that if you lower rates when the economy is going gangbusters, when markets are reaching all-time highs, and when liquidity is high, you're going to get either froth, bubbles, and or inflation, or all of the above. And all of that is going to be much harder to clean up.
Yeah, Martin, margin of safety agreeing with you, saying the Fed lowering rates could cause a larger speculative bubble reminiscent of what led to 1929 via Benjamin Strong. So there is a lot of concern about that. Tom V has a great question. What is Noelle bullish on? So what are you looking at out there that has you really excited?
Bitcoin, I mean, that's pretty much always my answer. And of course, there's a lot of factors going into that, and it could go up and it could go down. And if indeed we do get an almighty market crash, it will fall along with other risk assets. But we've seen Bitcoin over the past few days absorb a sale of 80,000 Bitcoin. That's roughly $9 billion worth, and it dropped a bit, but really not by very much, which is suggestive of there's some long-term buying in there. That wasn't necessarily trading we saw, that was some long-term buying. Bitcoin, the reason that I am still optimistic on Bitcoin, and the reason that I'm confident on that is stepping back, zooming out. The equation is pretty simple. Fixed supply, variable demand. Will global demand for Bitcoin go up or go down in coming years? Given the building uncertainty, given the growing censorship, given the vulnerability that an increasing number of people around the world are feeling for various reasons, it's more likely to be going up. And that's just on the individual level. When you factor in central banks perhaps taking an interest, institutions building treasuries, slightly separate equation, but not that much, especially when you're looking outside the United States, then the equation just gets simple.
That's sometimes you have to look at it through the simple lens, right? Because there is an awful lot of noise. Why would there be such a big sale of that? Like, especially with so much momentum. Does anybody know why that happened? Cosmo's wondering.
Various reasons. Obviously, we don't know. We don't even know who it was, but there are some suspicions. It could be a long-time investor, and this particular investor, apparently, according to On-Chain Forensics, was from the Satoshi era. In other words, made a
Wow.
lot of money. Could perhaps have decided that it's time to buy an island or something and retire. Or perhaps it's someone who's a professional investor from back then who thought that, okay, maybe now's the time to get involved more with Ethereum, and I'm sure some names are probably springing to mind. I don't want to speculate, but we all have names in mind who could fill those characteristics. But those would be reasons. We've been seeing a lot of this, though, to be honest. The 80,000 was the latest block, but there have been steady blocks from long-term holders hitting the market over the past few months because of the astonishing gains. Many, and I happen to know this, many always said, when it hits 100,000, I'll sell. And it did. And so they're buying their dream life now, which frankly they've earned. And that doesn't mean that they don't believe in Bitcoin anymore. It's just that sometimes as an investor, I'm sure all of you listeners know this, you just got to have a stop.
Yeah, and also, by the way, they could be, investing in some other part of the ecosystem, and it may not mean they sold everything they had, too. We should point out if they got in that early, it's probably just a little bit of what they had, and they may be looking to just make investments. We know there's a huge, and this is why I love you're so good. I don't know how you do it of keeping across so many of the projects out there. I wanted to ask you. Christopher, you make me laugh. He's saying he solemnly swear he did not sell 80K of Bitcoin. I don't.
It wasn't you, Christopher. Okay,
I think we all
I'll just take you off my list of potential suspects.
Yeah, the potential. Is there geographically? I know we used to talk about some regions being ahead and just doing a lot with experimentation, really being on the forefront. And I know you watch those projects too, which is so interesting. I love reading about them. And then of course we had this huge change in administration in the US sort of rapidly adopting another posture. Does it feel like that momentum is real in terms of spreading through many projects, or are there other parts of the world that still seem like they're ahead on this?
Yes to both, funnily enough. We talked about this, I think, back when Trump won the election and started talking very positively about all the crypto regulation that was coming through, and how this would galvanize other jurisdictions into doing something. Back then, most were well ahead of the United States. It really wasn't that hard. Then Trump won. They realized they were going to slip behind. And sure enough, the US has been moving fast. So there's a lot of scrambling going on there. And these things tend to move slowly, especially when all the jurisdictions in question happen to be going through their own political changes. And I'm thinking of Singapore, I'm thinking of Japan, I'm thinking of South Korea. They've gone through quite a lot of political turmoil themselves. But that said, there are other jurisdictions that are well ahead of the United States, not necessarily when it comes to institutional investment in spot crypto assets such as Bitcoin and ETH, but more when it comes to tokenization, not even necessarily stable coins, because the United States is definitely winning there as well, but tokenization. Japan has had a tokenization-friendly regulatory framework in place for years now, since 22, I think. Doesn't really have a lot of liquidity or activity there, but you can if you want to. Hong Kong has been trying trying to get a framework in place, bragging for a while that it was going to be the first major economy to get some stablecoin laws. The United States beat it to the punch. The Japanese regulation kicks in end of this week. And will there actually be demand for stablecoins out of Hong Kong? It very much depends what China ends up doing, because several international arms of large, and I'm talking massive, mainland brokerages and investment firms have applied for a Hong Kong stablecoin license. Hong Kong is trying to put the brakes on some of that and saying we're going to slowly and we're going to be careful. But the fact that there's interest from the mainland is significant, especially when you take into account how China has been trying to boost use of the digital yuan in cross-border trade. Perhaps Hong Kong dollar-backed stablecoins or even offshore yuan stablecoins might be of greater appeal to trading partners than a government-controlled digital currency. Just speculating here, but I think that is a region to keep an eye on, one that isn't going to overtake the United States because they've got momentum and they've got size, but that could at least become a contender perhaps for second place.
And it's what's interesting, I'll layer on that, is Hong Kong has come up multiple times in conversations I've had recently as an interesting area to watch on the macro side of things. So layer on what you just mentioned on the digital, asset blockchain side of things, and that's really fascinating. We're all going to have to do our homework. Let's end the conversation in the macro world, and we've got tech earnings coming out. We've got PCE inflation. We have an employment report coming out. What do you think is going to be most interesting here? What are you most keen to sort of get your teeth into, and that might move the markets?
Uptick in inflation, jobs are going to remain relatively strong. Of course, if you poke deep enough, you do get some signs of softening, but that's always been the case, nothing new there. And that is yet another reason why I don't expect rate cuts anytime soon. There's just no large alarm bells going off that would say the Fed needs to intervene in the economy. When it comes to tech earnings, again, they're doing pretty well because AI is definitely boosting expectations of earnings, and it's expectations of earnings that really matter. Tech companies would benefit from lower interest rates, as we spoke about earlier, but largely it's the bond yields that I think matter a lot for the equity market. And will they continue? I don't expect them to soar from here, but I also don't expect them to come down materially. Those macro indicators that you mentioned are the three to keep an eye on. That, and I'd add another one, and that is interest rate cut expectations, because in the end, it's expectations that drive markets, and we could see some strong fluctuations there. That doesn't mean you've all seen the charts, I imagine, of how bond traders have thought interest rates would go compared to how they do go, and they never get it even remotely right. But still, it's the only indicator of sentiment when it comes to that we have to go on.
Yeah, fantastic stuff. Noelle, I always love having a chat with you. And as I say, every time we talk, your Substack is just, I don't know how you keep across all of it, but it's absolutely amazing and so detailed in so many of the projects going on. And I'm always smarter reading it. So appreciate all your work.
Thank you so much for saying that, Maggie. That makes my day. And as always, so much fun talking to you. The time just flies by.
I know it does. I can't believe we're already at 30 minutes. Upcoming Blind Squirrel, who's in the chat on Substack, hey there, Rupert, is going to be our guest on Wednesday. He's going to have his work cut out for him. We've got a lot of those things we just talked about breaking on Wednesday. So we're going to hold it to him, even though it's a crack of dawn where he is. It's going to be a super fun conversation. So I'm looking forward to that. Hope to see you all there in the chats. In the meantime, everybody, take care and good luck out there.